Hi, everyone. This is Jack Allwile with another Money episode. Today, we have very special guest, Chris Rawley, founder and CEO of Harvest Returns. Chris, welcome to the show.
Hey, thanks a lot, Jack. Glad to be here.
So before we get into what is Harvest Returns and your background on agriculture investing, why don't we start with what was your relationship with money like growing up?
Yeah, really interesting question. So my grandparents were they grew up during the Great Depression, and I think they put a lot of, so a time of need and hardship, and they put a lot of those same um sort of traits into my parents, who in turn they flowed on to me as far as money was important it was good to have money and not good to not have money. Therefore, if you wanted money, you had to go out and work for it. My father was an entrepreneur. He was involved in some of the very first self-storage facilities in Texas back in the 70s. And so I learned early on that it was good to work for yourself. And it took me a while to get to that spot where I did, want to start my own company. But that said, there was probably, good and bad about all that upbringing and that relationship. And hopefully I took the good parts and left the bad parts out.
So is it really your dad that got you involved in real estate?
Yeah, I'd say that's kind of where I caught the bug. My first job, I was in the Navy, and my first job out of the Navy involved was with what's now JLL, commercial real estate. And so that's where I really kind of started to understand the mechanisms behind real estate and started investing in it myself.
So what is the story behind Harvest Returns?
Yeah, so if I kind of pick up there, I started like a lot of people that have a real estate investing background were buying single family home, renovating homes, renting them out, that sort of thing. And then, along that time, I did a lot of traveling because I was still in the Navy Reserve overseas, and spent a lot of time seeing places where people were more in touch with agriculture than we are, the average city people here in the US, where we've got, great markets and grocery stores and restaurants, and we've always got abundant food. In those places I traveled with the Navy, that people didn't have that. They were in some cases worried about where the next meal was going to come from. So started thinking a lot about farming and agriculture. Decided I wanted to invest in a farm at one point because I was getting kind of bored with just commercial real estate and residential real estate. And about that same time, platforms started to pop up for people to invest in real estate more automated manner. And so I guess I skipped a couple of steps and just decided to build a platform for people to invest in real estate. And that's how we started Harvest Returns back in 2016.
So if someone were to ask you what are like the pros and cons, I mean, a lot of Americans are more familiar with like stocks. If you could weigh up some pros and cons of agriculture investing.
Yeah. So, the main difference between where there's agriculture or private real estate investments versus stock market is you're investing in private companies instead of public companies. So these are companies that don't trade. So the first thing you should know is these are illiquid investments, regardless of how you're investing in agriculture. The only way you can have is kind of a liquid investment in agriculture is to invest in like a farmland REIT or farmland stocks, and there's a few of those out there. But the problem with those sorts of vehicles for investing in farmland is they are liquid, and so they have some of the same volatility as investing in the stock market. So you're taking a non volatile asset, an illiquid asset, and you're making it more liquid. Which there's some good things in that about that, and there's some bad things about that. You're taking away one of the reasons people invest in farmland is because it's not correlated with the stock market. So stock market can go up, stock market can go down. Farmland and agriculture are going to keep doing what it's doing. And the big pro that we see is the population of the world continues to increase. Therefore, more people need to eat, just like more people need housing. So it's very similar to real estate in that regard. So people not only does population increase, the amount of calories people consume continues to increase at a higher level than the population, because as people get more wealthy, as societies get more wealthy, they consume more calories. So we've kind of based our investments on that idea that agriculture is a growing business. It's going to need to be not only more food is going to have to be produced over the next 20 years or so, it's going to have to be produced more sustainably, because there is an impact on the environment, good, bad, and ugly, by producing food. Because of that, we think agriculture, we're bullish on it, and there's certain aspects of agriculture we like that we put those offerings in front of our investors.
From a lending perspective, so if a bank's lending on a home, the home is the collateral. If someone's lending in one of these projects, what safeguards protect their money?
Yeah, so agriculture, there's a finance system. It's not, I'd say, as evolved as the real estate finance and banking system, but it's there, and it's very old and static for the most part. It hasn't changed a lot in the past 50 years, and that's one of the reasons we're in this business, is to change the way farmers are able to raise capital. But there's land. Land is the best asset. Yeah, that's the underlying part of all real estate. Even if you have a building, if the building burns down, you still got the land underneath it. Hopefully that building was insured. But with land, farmland, it's always there. Hopefully it's remains healthy enough to continue to produce crops. We've collateralized on the loans we do. We've collateralized even cattle and livestock and equipment and things like that. Some farm equipment is not cheap. Some of these tractors, combines, things like that can be $500,000 or more. So it's very capital intensive sort of business besides just the land. But we also do equity. So we allow people to invest in these growing farms and ranches and businesses related to agriculture.
So in terms of what type of investors you guys help now, does someone have to be an accredited investor to invest at Harvest Returns?
Yeah, so the exemption we use is called Regulation D. It's exempt from, even though it's funny, they call it an exemption, but you're still following Securities and Exchange Commission guidelines. So, but it does, most of them require accredited investments, but some of the offerings we do allow non-accredited, sophisticated investors. Our minimums are at a point that they do allow, people that have some amount of money saved up, say $10,000, $15,000 to invest. Most of our investors, they kind of follow a pattern. They've never invested in agriculture before. They'll come on the platform, they'll see something they like, they'll invest maybe $10,000, $15,000, $20,000, and then they'll see another one they like. They'll have, good response. Maybe it's a debt deal where they can get exit fairly soon, or they're getting cash payments, and then they'll just decide to invest in more deals. So your diversification is achieved by investing in multiple offerings on our platform.
Can you go through some, like a sample structure of a deal, how they get paid back, maybe IRR?
Yeah, so lately we've been doing a lot of kind of high yield debt on a platform, most of them related to livestock production businesses. This is an interesting sort of area that there's very few other opportunities for people to invest in this, but we like grass-fed livestock. It's a premium product. It's essentially where the cow spends its entire life eating grass, rather than eating grass and then being kind of fed with corn and things like that. But those are high yield, could be 17% quarterly interest payments, 3-year term, which is kind of what the market rate is right now for corporate debt, private corporate debt. If you have if you're able to get a 5% risk-free return from treasury bills or even a certificate of deposit, investors need a higher rate. There's still some level of inflation out there, even though it's gone down quite a bit in the past 6 months or so. So people want a higher interest rate. And fortunately, these businesses that we invest in, they can produce those sort of cash flows to pay that higher interest rate. Even bank loans now where they were near zero or significantly higher. Anybody that's shopped for a mortgage sees, 7+% interest rate these past several months compared to where, 3% just a year and a half ago.
Can you talk through maybe some of the numbers on like in terms of like successful like investments, and maybe touch on maybe some projects that weren't quite as successful?
Yeah, so it's $34 million. We've done about 50 deals. Of those deals, I think we've had 12 exits. So we've distributed back about over $12 million in capital to our investors from those exits. We have had some unsuccessful, completely unsuccessful on the equity side. We invested in a series of, or in farms in West Africa. Farms, everything, we did the due diligence. They look pretty good. Everybody knew there was elements of risk investing in an emerging market. And, COVID happened. That really impacted the labor situation there. Also impacted, the inflation impacted the diesel costs. With agriculture, when gas prices go up, or petroleum prices go up in agriculture, and impacts a number of things. All those tractors, they still run on diesel, so that's a higher input cost. To get the food to market, that's a higher input cost. And then fertilizer, most people don't realize, I guess, that synthetic fertilizer is all made via fossil fuels. Now there are organic fertilizers and things like that, and we like that kind of farming, but for the most part, agriculture and commodities in general are driven in large part by the cost of fuel. And so because of that those deals went bad, and our investors lost some money. But knock on wood, we've never had a default on any of our debt deals. They seem to be paying off nicely. We've got a pretty good way to structure them and diligence them and collateralize them, and so far those have been really done really well for our investors.
Awesome. So you mentioned West Africa. What other geographies are you guys working in?
Yeah, so for the most part, we're here in the United States. We're all over. We've got farms all over the United States and ranches. We've done some tech companies in Canada, and in Europe, and we look at a lot of deals in South America, but we've only done one. So we're a global platform. If there was a higher demand for those global investments, we would do them. We would do more of them. But we've done a few, and they just weren't that popular. So we don't take on all that many.
Okay. And what are the current offerings that Harvest Returns has?
Yeah, so I can't necessarily talk about current offerings because of those SEC regulations
Okay.
and prohibitions on solicitation. But I will say that we generally do offerings in 4 categories. So one is that livestock. We talked about that. We do some indoor agriculture. So we've done things like greenhouses and vertical farms, hydroponic farms in urban areas, mushroom farms, aquaculture, indoor aquaculture. So that indoor piece is interesting. We do what we call specialty agriculture. That's pretty much anything but what most people envision agriculture. You're driving through the Midwest, you see corn, soybeans, cotton. We don't do those for the most part. We do specialty crops, so like vineyards and orchards, hazelnut trees we've done. So those specialty crops. And then the last category that we started doing a couple of years ago, for investors who are really looking to do something interesting, more of kind of angel investing with their money that they have potentially high payoff, but also high risk, is agriculture technology companies. So agriculture is embracing technology at a little bit slower rate than the rest of other industries, but it's making a massive impact on the ability to produce food and do it sustainably and efficiently and profitably. So these ag tech companies, they're like robotics that can reduce labor. There's sensors that are placed in the ground that can detect, moisture or carbon emissions or things like that. We've got all varieties of sort of ag tech.
Wow. So as we're winding down, I do like to ask everyone, what's the best and worst personal finance advice you've either heard or received?
Yeah. For me, the best advice, and one I would pass on is invest, invest early. So start out when you're young and invest, and you're gonna invest in whatever you feel like investing in. So you're going to make mistakes, you're going to lose some money, but the only way you learn how to become a better investor is to lose money. That you got to have that pain lesson. It's like the little kid touching the stove until they burn themselves. They don't really understand why they shouldn't touch the stove. And unfortunately, that's the best way to learn. But go ahead and invest. Don't bet your life savings on something crazy, but start investing early and often. Worst investing advice. Yeah, I'd say invest in what you know. That's a pretty common piece of advice out there, but that's you're missing out on a lot of opportunities if you don't, educate yourself and explore different sort of asset classes and mechanisms to invest.
Awesome. I think you're the second person that said that exact thing. So interesting. Cool. So Chris, why don't you give a handoff? Where can the listeners go learn more about harvest returns or get in touch if they have questions?
Yeah, awesome, Jack. Main site, harvestreturns.com, but of course we're on social media. Um, Instagram, Facebook, LinkedIn, all those, and we offer a lot of educational material, and part of that is because many people haven't invested in farming and in agriculture. They don't understand the industry because they're kind of separate. So part of our mission is to educate people not just on why they might want to invest in agriculture, but just why they should support farmers and farming, because it's important to all of us, whether you realize it or not. We're all eating.
Mm-hmm. Awesome. Well, Chris, I greatly appreciate the time, and I think the listeners are getting a lot of value out of this. So thank you.
Thanks a lot, Jack.